So we both know that there are several different areas in Indianapolis that require flood insurance. Can we go down that route for a little bit?
Oh, absolutely. So that's like a scary, you're looking at buying a house and you're planning and trying to make sure you're beating the 1% rule, and all of a sudden, boom, it's in a flood zone. You're like, oh my gosh, flood insurance, because flood insurance can get very expensive. So here's the deal with flood insurance. You should not be scared just because some place requires flood insurance. Based on if you pay cash, you won't necessarily have to have flood insurance. If you get a loan, if it's a traditional loan, they will make you get flood insurance, but you would be eligible for private flood insurance, which is usually half the cost of the FEMA type flood insurance. If you get in like an FHA or a government-backed loan, like the FDA or FHA, they are going to require you to get like the FEMA-backed flood insurance, and it will be probably the most expensive.
So again, you know, and I say this a lot with out-of-state investors because they just don't know Indiana. So when we talk floods in Indiana, we're not talking like New Orleans where it's going to be flooding halfway up the first floor. So Indiana is very flat. You know, it's a very flat land. It's very swampy. Yep. Any areas near rivers or creeks, you know, is what requires this. So again, you know, you want your replacement cost or the insurance that you need, but it's not something to be fearful of. This house is going to be flooded, you know, every other month. I had one of my owners that he owned this house for 60 years and never had water, you know, in his crawl space, but he had to cover flood insurance every single month. So, you know, do you have any other thoughts on that for Indianapolis particularly?
So normally flood insurance, if the lender's going to require you to get it, it's just going to be for the amount of the loan. So if you've got a 60 or 70 or $100,000 loan, you know, that's what they're going to require. So that's, you know, you can get minimum amounts on that. And then I think the big thing with flood is, like with my clients, the people that work with me, I have a way to check like a flood zone determination in about 20 seconds. So people that are already working with me, I tell this to them, I said, shoot me a text, say, I'm looking at this property, the map's hard to read. Is it in a flood zone? Am I going to have flood insurance? If I'm on my computer in 20 seconds, I can go, yes, you're going to need it. No, you're not going to need it. And I'm happy to do that for them.
And what's odd too is there's some lots that, yes, the flood zone goes through the lot, but it's not actually touching the house. So, and that's something you can zero in and see exactly where that flood zone happened. So that's right. Like a back corner of a lot was in a flood zone, but not the house. And we present that to the lender, and then they waive the need for the flood insurance. Okay, so let's change courses here a little bit and talk about flips or ones, construction projects that are going to take more than that 30 to 60 day. Yeah. A lot of that going on in Indianapolis, right? I'm doing one myself right now. Yeah. So, you know, it's a big deal in this area for sure. And so when you have a property that's going to be vacant for a while, you're going to do lots of rehab. It's not eligible for that DP3 replacement cost policy. You have to get what's called a DP1 or a DP2 actual cash value policy. So what that means is they're going to give you a depreciated value on the current structure. There are companies that you can endorse that, hey, we're putting in new floors, we're putting in new cabinetry, that they'll give you replacement cost on the new additions. We could endorse that. But the big thing with this is we want to cover your investment. You buy the house for 40, you're going to put 40 into it. We want to insure the thing for 80,000. Make sure that if something really bad did happen, like it burned down, we at least get your investment out of it. Then we have to do some special endorsements. So the policy in and of itself doesn't come with like theft and vandalism. And I'll tell you, in the last like 6 months, we've had probably 30 or 40 claims over theft and vandalism. Wow. It's a big deal to have on the policy. We always offer it, because what happens is people will wait and watch your rehab. And then at the end, when you're putting your nice appliances in, they kick the door in and go grab it, right? Yep. So, had it happen to myself twice. So, yeah, you know. Yeah. It's part of doing business as the city is changing. I lived through this in Raleigh, North Carolina, where I'm from. And when that city changed to what I see is happening in Indianapolis, it happened a ton there too. And I think it's the nature of the beast of what's going on here. It's a cost of doing business. And again, you know, just kind of a side note, things that they can do to help. You know, we want the insurance coverage, but don't put appliances in until you're ready to put your tenant in or sell it. At the end, that's right. You know, use an appliance package. If you're putting a new AC in it, put a cage over it, put a lock on it, you know, make sure that your windows are covered so that they're not seeing that you're under construction. So they come in and try to take the copper pipes or something like that. So there's some things that just practical tips that you can do, but yeah, definitely have that insurance coverage on top of it.
And I know some that if it's a true flip in the seller buyer agreement, what they're doing is just giving a credit for appliances post. And so they're not even putting anything in there that would, you know, people would want to break in and go get it.
Yeah.
So that type of insurance is it's on an actual cash value basis. It's usually short term. So if you're going to hold on to the property and you're going to put a tenant in it, this type of policy, we only want to keep you in it as long as we have to, because it doesn't cover as much and it's more expensive. But you know, even if it's a $2,000 or $3,000 a year policy and you have to pay $250, well, hopefully your rehab's done in 3 months. You're paying $750, which is not fun, but then we get you into another policy, which is probably $750 for the whole year. And it's just the cost of protecting your $100,000 investment. Yep. So it's not fun. No one likes it, but it's a necessary evil so that you don't lose your shirt on your investment.
And for just personal experience, totally easy to do. So literally last Friday, actually, I met Thursday with Ted and his assistant, Mary. And I told her, hey, this is what I'm doing. Here's my purchase price. Here's my construction cost. I was doing a hard money loan. So I needed to cover the hard money lender, had a certain number, gave her all those numbers, gave her my ID. Literally like 3 or 4 hours later, she had the policy all written up and ready to go. And then she's like, oh, wait a second. I found one that's a little bit better, that once you're done with it, we can get it flipped over. So let's do that. So literally under 24 hours, very easy to do. One phone call with Mary and I had that policy sitting in my inbox. So very easy process to do, especially with Goosehead.
Well, good. I appreciate you saying that. We do actually work hard to try to do it in one call. Everybody's time is very valuable, and there's a lot going on, and you know, many investors have 9 to 5s, and for us, we've actually adjusted our work schedule. So there's a lot of times that people are out of state in West Coast and they need to talk what would be 7 o'clock, 8 o'clock, 9 o'clock our time. And for us, like, we've made some adjustments to make that happen. And so, you know, our goal is usually to get the information we need, get everything ready, present it. You think it's good, great, let's do it. Let's get it in place. Let's get it to your lender, and then everybody can keep moving forward with whatever else they've got going on.
Right. Okay. So another thing that you've been kind of hounding me about, which we're in the process of doing. So right now I'm kind of crossing that threshold of I've got 5 properties now. So you've been saying you really need to get an umbrella policy. So tell me why and what the purpose is and how that protects us.
Yeah, sure. So an umbrella policy is a separate policy that does just what an umbrella would do, right? You open it and it comes out and it goes over top of. And so generally an umbrella policy would go over someone's primary home, their autos as well, and then rentals. So if you're with a traditional, I'll call them a captive carrier, your State Farm, Farmers of the world, they're going to require that they have both your home and your auto before they'll even get to your rentals. And many of those captive agencies will not allow for LLCs, and they'll have a cap on the number of rentals that they will insure for you, usually somewhere between 4 and 10. And then some states will not allow it to go outside of their state. So there's been, for instance, many California investors that I've spoken to that want to get an umbrella, but and I always refer them back to their agent where they live. I was like, because your home at least have to get involved, probably your auto. Go talk to your agent. And they come back to me and say, yeah, I have to raise my auto limits up a lot to get it to qualify for the umbrella, and they won't even do my out-of-state investments. Like, what can we do? And because Goosehead is a national brokerage, we write that type of insurance in California and Texas and North Carolina and Florida and everywhere else that's not Alaska and Hawaii. So at that point, we actually end up helping people with their primary home and auto insurance and get them the umbrella that they need. We happen to have a company that's very investor friendly. They will completely leave out of that equation your auto if you want, and just do your primary residence, which you could rent even, and they will cover it. And then they'll put 29 rentals under there, whether they're in your name or on the name of an LLC. So what this $1 million does is it extends the liability on the underlying policy, which is usually $500,000, and gives you an additional $1 million to $5 million. So what does that extra $1 million to $5 million get you? If the underlying limits on your policy are not enough, somebody gets hurt and there's surgery and they go to the hospital and they can't work for 6 months. And if it's your fault of your house, of something bad that happened, you got to pay for all of it. So your first line of defense is the regular policy that you have on the house with the liability that's there. Then your umbrella kicks in an additional $1 million, again, to $5 million. You get to pick that number based on price and what you want. And what that will do will extend those medical payments, but it will also give you court costs, lawyer costs, awardances, and settlements as well. So if you are found negligent, that you knew there was bad knob and tube wiring in a house and it caught fire and these people lost everything and somebody's burnt really bad and they're going to be out of work for a year and all these surgeries and it's 1.2 million and they sue you for